3 years ago, we learned that Dow Chemical and DuPont were merging to create a titanic company that could then break itself up into 3 smaller, more specialized, more rational businesses: an agricultural play, a material science play, and a specialty products play. I've been a huge fan of this story, both because this is exactly the kind of move that tends to unlock a ton of value, and also because Ed Breen, the CEO of the combined company, has an incredible track record when it comes to breaking up enterprises. He made you a fortune when he divvied up Tyco. Now, this 3-way split is coming early next year, but it's been rough to own DowDuPont of late, so I know all too well, since we own it big from my Chapel Trust. You can follow that by joining the ActionAlertsPlus.com club. The stock's down more than 16% for the year, but ever since the market-wide bottom last month, this thing has been soaring, up almost 16% from the October lows, including a terrific run after the company reported a great quarter last week. For the past couple of days, the company's been holding a series of investor events to really kind of lay out the story. So let's check in with Ed Breen. He's the visionary CEO of DowDuPont, get a better sense of what this breakup means for all 3 divisions and their shareholders. You, Mr. Breen, welcome back to Mad Money. Good to see you, sir.
Thanks, Jim. Good to see you.
Okay, this is really important, Ed. There are people who own this stock, and they're going to say to me, well, what are the 3? They're not going to say, which ones do I sell? What are the 3? So I need you to give the shorthand that is not to hedge funds and not to analysts about what people are going to be getting soon from what you've done.
Well, you're getting 3 world-leading companies in the respective industry. It's pretty incredible, because what happened is we moved around about 20 different businesses from Dow and DuPont and reorganized it. So you're getting one of the world-leading ag companies, by the way, the only publicly traded big ag company I might mention. You're getting a specialty company that benchmarks against any of the best specialty companies in the world in new DuPont, and you're getting a great material science company in Dow. And all 3 are truly industry leaders that are coming out of this.
Okay, so if you think a great secular growth theme is feeding the world, you're giving us the best agricultural company.
That's correct. That it's one of the most diverse. There's only 2 companies that really play across the whole spectrum. And we have both the seed portfolio and the crop protection portfolio. So the breadth of this, the products in the ag business are really spectacular. We have the biggest product launches coming in the next 5 years that we've ever had, 21 new products coming out. So it's a great business.
We know Mr. Fitterling. He's going to be running a company that's generating huge cash flow, maybe a good dividend if people want that.
Well, first of all, I'm so pleased that Jim's going to be the CEO. He's an awesome operator and really a strategic guy. And they did announce, and we announced yesterday with the Dow business, they're going to pay out a 45% net income ratio. And on top of that, we announced that they're going to pay out at least 20% of their net income in share buybacks. So it is a true cash machine, and it should be the way you should run that business. And so it's going to be a big payback to shareholders.
So a fast grower in the crop protection ag. We've got a company that could be a good dividend play. And now let's talk about DuPont, because this looks a lot more like than Tyco than any of them. And you're executive chairman. This is going to be a company: transportation, advanced polymers, electronics and imaging, safety and construction, industrial biosciences, nutrition and health. That sounds like, to me, 5 more companies. Could it happen? You've done it.
Yeah, no, absolutely. And what we've done with the board, our new board, which by the way, we recruited some great people to it in the last few months. But we've already talked to them. We want to run the company the way it is. I think it's going to trade very well. It benchmarks against the best multi-industry companies in the world. I've benchmarked it for the investors today against the 3 best multi-industry companies, and our benchmarks are right where they are.
Can you share which ones that you?
Well, we benchmarked 3M, Honeywell, and ITW.
Right. They are the best.
And our EBITDA margins are right at the top of the heap at 28% EBITDA margin. So I think that says a lot about the health of the business. Having said that, we'll always look at all our options. And if we see a better path to create shareholder value, we certainly would make some moves with the portfolio.
I was surprised the stock came down so much. I know you bought a huge amount of stock. What do you think is the most underappreciated about DowDuPont by investors?
Well, I think people are just starting to study it. I think it was a confusing story, because we moved so many things around. It took long to accomplish it because of the antitrust approvals. And by the way, Jim, very interesting. When I split Tyco up into the 5 companies, it didn't really start overperforming till we got very, much closer to the spins. People were doing their study, and you want maybe 1 or 2 of the stocks, not 3, so you're not buying in early. And then if you really looked at it, and you certainly know the story,
wow.
The 5 years after you did the deals and you looked at the appreciation from when we started through, the stock was up 1,000% with dividends. So,
and that's why I'm telling people it's okay to wait.
So you're in a little bit of a dead period always, and then, things start really percolating.
But it's not so dead because you're buying back $3 billion worth of stock. I didn't think you'd do any buyback until you got the split.
Well, we're not only doing that, we're doing it in a 5-month period. And then as we were talking today to the investors, we're going to be shareholder friendly with the dividend of all 3 companies, but we're all most likely going to institute a share buyback as soon as we do the splits of the companies for each of the 3.
People during a period when it went from the 60s to the 50s were saying, look out, China's going to be bad for them, China ag's going to be bad. None of that's really played out, right?
No, it's incredible. We reported, look, our sales went up 10% in the quarter we reported last week. Our EPS was up 35%. And when you look at the sub-segments people were concerned about, they said China. Our China sales were up 18%. They said industrial. It was up 7%. And the big one they kept saying was auto. Our auto sales grew 10%.
And you should tell people because it's not, you are not carburetors. You are the new parts of the visionary parts of autos.
Well, and most of the DuPont portfolio is in the secular growth areas. That's where we put our science and research. So, for instance, in the auto industry, we're the ones electrifying the cars, which is the wave. We're also the company lightweighting vehicles, which is a huge trend that's going to continue. So that's how you can grow 10% at a time when auto builds actually last quarter were probably about 0. So you got to be in the right secular areas, and that's where we are really diverting our R&D and innovation machine. So we're in the high, fast growth areas over the next 5 years.
I'm glad you mentioned the R&D because that was be next for me, which is that a lot of people thought I'd put these two together. Ed Breen will slash. Your R&D is actually up.
Yeah, so the beauty of redoing the portfolio, and I'll use DuPont as the example, we're going to spend almost $1 billion on R&D per year. So it's at a rate that's very healthy compared to the competitive peer set. But what happened is you're bringing R&D in from the Dow businesses that came in and the DuPont, and you're bringing that R&D into the same end market opportunities, like in nutrition and health. We both had nutrition and health companies. Now you're bringing double the R&D to bear on that industry.
Well, one of the areas, and just because there's so many great things, we can talk about Tyco, talk about Kevlar, but probiotics, okay? So we had our Benadryl on from Clorox. You can't stock the stuff. And you make the best probiotics.
So we're about 1/3 of the world's probiotic market, and it's still kind of in its early stages.
I think people could take one a day. The whole world might have to take one.
Well, if that happens, we have a heck of a company. It's that business last quarter and all year has grown 25%, and we're just really now starting to penetrate the Asia market, the China market. But the percentage buy over there is still relatively small compared to North America. So I agree. There's going to be a big uplift in this one.
One last thing, and I know you're a very humble man, so it's going to be difficult. He's from about a mile from where I grew up. Everyone always says Ed Breen's going to leave. Ed Breen's going to leave. He's got to sell him. Ed Breen's going to leave. You're not. You're still going to be involved with 2 of these companies.
Yeah, I'm going to be on the board of Corteva, and I've committed, and by the way, I'm very excited and energized to be committed to be executive chair of DuPont. And just to clarify, it's a full-time position.
Right. Well, it's important because there are people who say, well, he's gotten old, and we're the exact same age. I don't feel old. You don't seem to look or act old, so I think we're going to be pretty terrific. You're going to be living where? In Philly? Where are you going to stay?
Yeah, Center City, Philly, because it's a 40-minute commute down to Wilmington, and I can't leave Philly. I know you love Philly in the evening, so I'm staying right there.
All right, terrific. That's what I want to hear. Okay, that's Ed Breen, CEO of DowDuPont, DWDP. You guys are looking for stocks that have a lot of room before you even get to where their old highs were, with good yield and good management. This is it. DowDuPont. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.